You know the biggest problem with volume analysis? Every indicator shows you the same thing, where volume occurred, but none of them ever tell you if that volume created balance or imbalance, acceptance or rejection. Then you fade into high volume nodes expecting support and get run over. And that's exactly why you need to see this indicator that shows you which price levels institutions accepted versus which they rejected. In this video, I'm going to show you exactly what this indicator is, the best settings to use, and a complete trading strategy you can start using today. To add this indicator to your chart, head over to TradingView and pull up any market you want. I'm using the 1 hour time frame on GBPJPY, but this works on any market, any time frame. Click on Indicators and search for Balanced Delta Volume Profile. Make sure you select the one by Zierman. Now this isn't your standard volume profile that just shows raw participation. No, this is much better. Most volume profiles just plot where volume occurred and assume high volume nodes equal acceptance. But that's wrong. High volume can represent panic selling, forced liquidations, or institutional distribution. What makes this profile truly special is how it weights each price bin by 3 critical components. 1. Delta symmetry, showing balanced buyer-seller pressure. 2. Price compression, revealing where price coiled tightly. And 3. Hit frequency, showing how often price revisited that level. The result you get is a heat-mapped profile that separates genuine fair value zones where institutions accumulated from thin areas where they dumped positions. However, trading like this with just one indicator is how accounts get blown. Plus, you'll miss 70% of the best setups because they happen while you're at work or asleep. That's why we trade with fully automated strategies that have proven multi-year performance across every market condition. This is exactly how traders consistently hit their targets, whether passing prop firm challenges or scaling cash accounts. The best part, experience level doesn't matter. The strategies work regardless if you're a beginner or veteran, as it's automated, helping traders achieve their goals without being glued to screens. We work with a limited group of 30 traders each month to ensure everyone gets proper guidance and setup support. If you want to see how these automated systems perform in real market conditions, click the first link below. Now, to get the most accurate signals from this indicator, let's get your settings right. Double-click the indicator to open the settings panel. You'll see history length set to 100 bars by default. For most trading, bump this to 200 bars to capture broader market context. Next, set bin count to 30 for vertical resolution. After that, you'll see 3 weight parameters: volume momentum weight, price momentum weight, and hits weight. For balanced emphasis across all 3 components, set volume momentum weight to 1.0 to reward symmetrical flow. Set price momentum weight to 0.8 to emphasize compression zones, and set hits. Weight to 0.6 to favor revisited levels. Set min hits. Filter to 3 to remove single-touch bins that distort the profile. Also enable highlight max volume bin to identify the point of control, the dominant price level institutions care about most. Once you've adjusted these settings, click OK. Now let me show you how to trade this balance-weighted profile. For trending markets, thin bins become your breakout zones. This is where the profile shows its true power. During strong trends, price moves quickly through low balance, low hit bins, which appear as thin, muted bars on your profile. These areas represent rejection, not acceptance. It means institutions didn't defend these levels, so price sliced through them. To trade it properly, first, identify the current trend direction. In uptrends, find thin, low balance bins above current price. These are your breakout targets, areas where price has minimal resistance because institutions never accepted that value. Now, when price approaches these thin zones during a trend, that's your signal to add to winning positions or enter new longs with confidence. Set your stop loss at the most recent high balance bin below current price, where institutions would defend and target the next high balance zone above, where you expect rotation or consolidation. For downtrends, follow the same process but in reverse. For ranging markets, high balance POC becomes your rotation anchor. This is where most traders blow up. They try to trade breakouts during consolidation and get chopped to pieces. But the balanced delta volume profile shows you exactly where to trade instead. You want to look for thick, bright bars in the profile. These represent high participation at balanced prices. The thickest bar is your point of control, automatically highlighted by the indicator. This POC marks the most influential price level in the current range. Now, when price leaves the POC zone and returns, you're watching for reacceptance or rejection. If price comes back to the POC from below and holds above it with a bullish candle, that's reacceptance, which means institutions are defending fair value. Enter long with your stops below the POC and target the upper range boundary. Quick reminder before we move on, you just learned a very powerful strategy. But here's the reality. You can't execute all of them manually while living your life. That's exactly why our community of traders automate strategies like this. So they're catching every signal across every market, whether they're at their desk or not. with complete frameworks handling entries, exits, and risk management automatically. The difference? They're trading systematically instead of hoping they catch the next setup. And if you want to see how these strategies run on autopilot, don't forget, click the first link below and join our trading community today. Now, different markets require different settings for the best performance. For forex pairs, set history length to 250 bars and bin count to 35. Forex has cleaner two-sided flow during major sessions, so you can use more bins for detail. Set volume momentum. Weight to 1.2 to emphasize balanced zones, as forex institutions rarely show one-sided aggression. For crypto, increase history length to 300 bars, but reduce bin count to 25. Crypto needs more historical context because volatility creates fragmented profiles. Lower volume momentum. Weight to 0.8, because crypto often shows imbalanced flow even at fair value. For stocks, use history length of 200 and bin count of 30 with default weight settings. Equities show clean institutional accumulation distribution patterns that work perfectly with balanced weights. Pay special attention to profiles after earnings or major news, as these often show institutions reestablishing fair value at new levels. For gold, increase history length to 280 and set price momentum weight to 1.0. Gold coils tightly before explosive moves, so compression zones matter more than delta symmetry. Reduce bin count to 28 to avoid overfragmentation from gold's sharp volatility. Thanks for watching, and I'll see you in the next one.